Hey, good afternoon. Can everyone hear me? So thank you for joining us today at Raleigh Regional's Global Advisory Committee. Today, as we delve into navigating international property taxes with our esteemed Realtor member and CPA, Vinita Chaudhary, also known as Vinny. It's a pleasure to introduce Vinny, a highly accomplished certified public accountant and chartered accountant. Vinny is a member of the American Institute of Certified Public Accountants and the North Carolina CPA Association, with both a bachelor's and master's in finance, along with an MBA. Vinny has worked with top firms, including the Big Four, since starting her career in 2007. In 2016, she founded her own successful sole proprietorship. Beyond her professional achievements, Vinny is dedicated to her community, serving as a member of RRAR's Leadership Identification Committee and volunteering with various other organizations. She also shares her expertise as an instructor at Wake Tech Community College. Vinny, thank you for joining us today. The floor is yours.
Thank you so much, Eddie. I really appreciate that introduction. Hello, everybody. I will be sharing my screen and then we will go on the agenda and then I'll be introducing myself there. But I'm Vinita Chaudhary, CPA. Let me take ahead and share my screen. Okay, so today we are here to cover the international matters. As a realtor, welcome all the RRAR realtors here. Definitely, we come across a lot of international buyers and sellers. Today, we will learn how they are important about us. So we'll be covering the real estate planning, some tax compliances about it, some foreign tax credit, their structuring, advising. We will touch base on some entity types which is needed for the local people, and then what do we need instead of Social Security, their ITIN number. I'll start with my introduction. I'm Vinita Chaudhary. I'm a CPA as well as a realtor. I do have a 20 years experience with PwC, KPMG. I have worked with the corporate world and then started my own accounting practice. I am well connected with the community. So I have been, doing a lot of nonprofit organization work also, help with HOA boards and churches. This is my personal information. If after the webinar anybody wants to reach out to me, feel free to note that out. That's my firm, Tax Guru. We also go by Jane Consulting. We are established in Raleigh. Just a small introduction about my family. I have 2 kids, and one of them is studying in NCSSM. They recently started, and the other one, my daughter, Divya, is studying in the Wake Early College. And my husband is my partner in the company, so he also helps me with the business. Okay, on the topic now. So we are studying about international taxes. Definitely, US is a very big economy, and the other countries are all the time interested in investing here. And also, once they invest, they have to sell and get out of it. So they should understand what the tax implication of that is. As a realtor, we should be able to help them understand and navigate through that transaction. So we will just learn about some basic stuff which we should know during this transaction. Tax treaties. So what are tax treaties? Every country has a setup of tax adjustments or agreements between each other. In same way, US has tax treaty or agreements with different countries. So if, for example, you are paying taxes in US, then Canada might say, okay, we will help you not to pay double taxes because you have paid a tax in one country. So basically, it's helping you to avoid the double taxation. But in some countries, there might be a possibility that double taxation avoidance rule is not there. It means both the countries, or US and the other country, never came into a negotiation where they help you to not pay double taxes. So in that case, it is not very favorable for that person to invest in that country because you have to pay double taxes when you sell. So again, like these are called tax treaties, and it is very important if a foreign person of that country is buying a property in US or a US person is buying a property in outside the country, we are aware of what the country rules are in both the places. So it's very good to know your home country rule and foreign country rules. Now, the home country will be the country where the resident, the person is residing, and the foreign country where he is buying the property or doing the adjustments. So, if you're dealing with any foreign person, definitely very important to say, hey, are you aware what your country laws are? And if not, then we can connect to that accountant of the country of that accountant or a global accountant to understand and make them well aware what will happen in regards to property taxes, capital gains, or any other taxes which might be implicated. Like simply, even to buy a property in US, a person without a social security cannot even buy the property. They need to have a substitute number. So knowing that before even dealing or starting a transaction is very important to know the country rules of both the sides. I'll take a quick break here, a moment, and ask Eddie if there are any questions we need to answer.
There are no questions in the Q&A chat box, but I'm just personally curious, is there a place that you can search for the global tax professionals in different countries, or is that just something that you Google, or how would you go about finding someone in a specific country?
Good question. Google is your first search option, but all the time everything is not correct on Google. So definitely going on IRS website and through IRS, there are different ways to go through that deals. So we have to search and then we have to go to the resources and guidelines to get that documents. Okay. Very, very surprising information that, not only some countries, but there are countries which are known as tax haven. And a lot of people try to invest or go after their retirement to live into these countries because after a certain time, there is no tax in these countries. There can be reasons where there are no corporate taxes or income taxes. So that's the reason they open their companies there. Examples: British Virgin Islands, Bermuda, Cayman Islands, Netherlands, Switzerland. So you might have heard these names. Oh, after my retirement, I'm planning to go Cayman Islands. Yes. But why do they think about it? Not only just property taxes, but the corporate taxes also, or their income taxes also. Sometimes there is minimum or zero taxes where they have to pay. So when they are selling any property, no capital gains in those countries. So those are called tax haven indexes. In future, if somebody is planning to plan for a retirement, definitely those are important countries to be kept in mind to know what the tax implications can be for those countries. This is a list of some countries where there is no property taxes. So US is counted as 39th number of the country, in the list of the property taxes. Again, we do complain, oh, the assessment has come very high, especially in the Wake County. Just this year, we heard that. But there are some countries where there are nil taxes. The reason can be, there's more land opportunity or the government do not need that much taxes. So that's also one of the very good investments people look as a point to save on a regular maintenance cost. So there are 30 plus countries where we've seen there are no property taxes. Again, Cayman Islands and few more, the common ones, Bahamas are still here. And that's why they become the, favorite retirement places for the people. Now I'll cover something about the entity. This is something which we all go through as a real estate agents. We might, or any person as a foreigner who's planning to buy a property can also consider this. So what we do is when we start business, or if you're planning to buy a property for an investment, we either can open a LLC, we can make it a LLC as a S corporation, convert it into C corporation, and if needed, just like to use it as a sole proprietor. So as soon as you open a company, there are different options you have to make it and take a decision on it. Now, for the real estate agents, especially when you are having a business, and this is something, one of the questions reminds me why we had this webinar, because when you make a LLC and you put your partner's name is there, a partner can be your husband, you put your daughter's name or anybody's else name, it is just not a simple LLC. It is a partnership now. And you do not have to just file a simple tax return like with a 1040, but you have to do a 1065. That's a partnership tax return. Very heavy penalties if you do not file that on time. And unknowingly, people do not know, they just put two names and you are converted into a partnership automatically. What do you do at that time? Basically, you have to fill up a form or you ask for advice with the advisor, like a CPA or a lawyer, and you change it back to the S corporation or a single member ownership, as in what is needed. You want two members, then S corporation is a option for you, or you make sure that you have to do the filing as a partnership. For real estate agents, now this is something for a lot of new real estate agents, they might have seen this covered. Once you make yourself as a realtor, you cannot use the assumed name. You have to just use your full name if you're doing any of the work. You can open a sole proprietor. If you just open a sole proprietor, do not need to register with the NCRAC. Like you do not need a firm license, means you're still paying your $45 and not the additional firm license. But if you make a LLC, which means you have now got articles of organizations at the NC state, then you have to register with the NCREC firm also. So basically now you're paying two license firm. And I'm especially covering this because as a real estate agents, we do our firm set up like this. Now, if you convert that LLC into a S corporation, two basic requirements are needed. You have to give a W-2 to yourself, means you cannot just write a check and take out the distribution, which very, very hard to make them understand that, hey, why I am taking or paying taxes on my own salary? I'm the only person working. Now, that's basically what is the difference between the LLC and the S Corp, which I'll be covering up in my next slide. Or the third option is you can make it as a C Corp. Now, C Corp is a very rare case. If your firm is very, very big, you have a lot of people, a lot of agents, and you're looking at like next stages, then the companies can go into C Corp. So let's cover what is covering the difference between the limited liability corporation and the S corporation. So I'll show you simple math here. Suppose a LLC is making a profit of 100,000 and a S corporation is making a profit of 100,000 also. What happens is in the S corporation, you take a part of your salary, 50,000. I'll just hover my mouse here, in the W-2. So suppose when you take 50,000 on the W-2, you only pay on 50,000 the social security taxes and the Medicare taxes. Whereas in the pass-through entity, which is your LLC, you pay the social security and Medicare on whole 100,000. Just because you have not taken salary, the IRS thinks or wants you to pay taxes, self-employment taxes on the whole income. Whereas you are saved here because you have taken some amount in S corporation. So in the end, after taking the salary, when the other remaining amount, you can take it as a distribution. So you get a saving of $6,000. So that's why once you do a math, your S corporation is far more better than a LLC. Okay, I'll take a quick break here and I'll leave this calculation. If you have any questions, want to check?
There's no questions in the Q&A, but I guess someone wanted to know more about the double taxation. If you could expand upon that. I had a question about the LLC and S Corp. I have an LLC was set up in 2013 that was set up as an S Corp, and forgive me if I'm not using the correct terminology. So I get W-2s, but it's an LLC that operates as an S Corp. Just wanted to make sure that that's the optimal setting for tax.
So I'll answer that question. Yes, that's the optimal setup. Every company on the top is named as LLC, means, it is branded as LLC, but behind the scene, it will be taxed as the S corp. So you will still get a W-2 and you are completely correctly, tax saving strategy wise set up. In regards to the tax treaties, again, there are tax treaties with different countries because I cannot bring with all the countries. If you have a particular country which you have a question with, I can take it, after the webinar, that question, and get back to you. But just to cover on high level, tax treaties are negotiations and agreements between the two countries on different sectors. Like if you have paid tax in one country, then while doing your tax returns in your resident country, you can get a tax credit. It means you will avoid the double taxation there. Let me know if I have answered your question or if you have a backup question on that.
No, you answered my question. Thank you. But we have a few questions coming in via the Q&A if you got a sec. So Chris Isaacs is asking, I thought that you can't have your spouse as a partner on an LLC partnership. You have to file your LLC on your personal taxes. And there are a couple other questions, but I'll let you answer that.
Yeah. So no, if you have a partner, and that's where I was saying, the LLC will be the name. If you already have a partner, you are no more a LLC. You have to file a partnership return. And that return name is 1065. So just go on Google and say 1065. Because you're two partners, you have to first file the 1065. The output will be K1, and then you will be, doing your personal taxes on the basis of that K1.
Thank you. Thank you. There's also another question by Sinead Doyle. With the S Corp, if you take 50K as wages, what happens to the other 50K? How is it treated?
Very good question. So now the other 50K is called a distribution. Basically, what happens is when you take out that money, you can just write a check to yourself and take it out. You're not paying taxes on it. So when I say not paying taxes, it means you're not paying any Medicare or the FICA taxes, but you will still be paying the property taxes, the income taxes. So basically what happens is the 50K is remaining in your bank. You just write a check or you do a transfer. It's your money, or you leave it there, keep it like, accumulating, and you can buy a next house or investment with that amount. So it's your own money. You can take it.
Thank you. Another question from Fatima Diallo. As an S Corp, are you required to pay quarterly estimated taxes in North Carolina?
Very good question. So very good understanding you have to do is, as soon as you make a S corporation, you have to run a W-2. Means you have to have a payroll. When you have a payroll, you have to submit a form filing. Now that form filing is called quarterly taxes. So whether you make a money or you do not make a money, you have to do a quarterly filings, which are in the form of payroll taxes. You have to pay income taxes only if you're making a lot of profit and you think so, you are liable to pay some income tax at the end of the year, then you will pay income tax also.
Thank you. There's a follow-up question from Chris Isaacs that asked the first question. But what if your partner is your spouse? I have my wife is my partner in my LLC, so I'll let you answer.
So there is two options here. One is you still have to do a partnership tax return, or sometimes it is called, like a disregarded partner, which is because it's your spouse, but there's a form filing which you have to do. And then you can just show it in your personal tax return. So then that's a possibility. But till IRS knows that that's your spouse because you have not done that disclosure. IRS is expecting you to file or tell them something that this is a partnership with your spouse or with some other partner.
Fantastic.
Awesome.
And there's another question by Arnav Agrawal. Is there a tax treaty between India and USA? If so, what are implications of sale, percentage purchase on property, and reparations of funds and tax implications?
I will need to look into that question. Okay, is there a tax treaty between India and USA? Yes, there is. And the percentage you're looking is not, it's basically on the capital gain. Now there are different type of treatment depending upon where the property is sold. Again, we are studying for each country a very diluted study, because in India they are doing price indexation. So the property is dependent upon there. Now how much tax you paid there, you will get a credit back depending upon how much tax you are supposed to pay if that same property would have been in US. So it just depends on it.
All right, thank you. We'll take one more question, but yeah, please keep them coming for, and we can ask them on, I guess in a few more minutes. Yeah. But this is from David Sweatman. We have to make the transition from LLC to S Corp on January 1st, or can it be done anytime during?
Very, very good question. There is a time limit of within 45 days from 1st January or within 45 days since the company is made. So by March, by February 15th, you should be filing that form, 2553 form, to make it a S corporation. If you have not done that, then you miss the whole cycle. Then you have to do a late election. So from not January 1st, but till February 15th, you'll have the date. Okay, we'll hold on for the next questions and I'll move to the next slide because there'll be some more interesting topics we'll see here. So now, something related to foreign. Now, very interesting topic. I do not know if everybody or anybody knows what ITIN is. ITIN is an individual taxpayer identification number. So now anybody who is in US already have a social security number. That is their ID to use anywhere during the closings, during opening the bank, during the sale of the property. But any foreign person do not have a social security. Now, how will that person buy a property? And why do they buy the property? We do understand, it's a country of land of growth. So people need to invest here in US. People do invest, and even the US people invest outside the country. So when they're investing in US, they can get ITIN number by just few ways. Again, there is a way they can go to the IRS, they can show their passports, and then they can get ITIN, or register agent, which is, suppose I'm a registered agent here. It means IRS has certified me that I can see somebody's passport and then verify them and give them the ITIN, applications or numbers. Now that number is good till you get Social Security. So a person cannot have two, they can have only one number. Now this number is used to buy any properties in US. You can also open a bank account with this number. Sometimes they allow you to get driving license also with that number. So very common, ITIN is needed for a foreign investor to invest in US. So again, for all the realtors, as soon as you say, I'll give you an example. If a daughter is studying here and mom says, you know what, I want to buy a property for my daughter because she's doing a college in, here, maybe in Raleigh, and then she wants to settle down here because she'll get a job here. But they want to buy the property in parents' name, and they want to become the owners here. Possible? Yes, we have to get ITIN for the parents, and then they can be the owner of the property. If the daughter moves out, they can still get a rental income of that house, and the owners sitting whichever country they are, suppose China, the owners as the parents will be getting a rental income. So very, very interesting that ITIN is a substitute of Social Security, And it is much, much needed for any foreign investor to even start about talking investment here. So I would say to the realtors, don't even proceed showing the houses, because ITN itself will take somewhere 3 months to get this number. Until you do not have this number, you cannot open a bank account, you cannot do much transfer until unless it's a cash closing and the money is directly coming to the seller's account. A lot of things cannot be done without it. Now, just a normal question, can a foreign owner buy a house in USA? Yes, we just saw that with the ITINs. Can you guess how many people do buy houses? So I have a number in last year. How many investors are there? Surprisingly, 53 billion people in US real estates are purchased by foreigners last year itself. So there are a lot of people who are just like, going. And that's one reason that a particular place, if it's invest, they're just seeing outside market and they'll go and buy the big chunk of that place as investors. Now, once they buy, what happens when they want to sell that property? Because again, the realtors are there in both the ways. When somebody is buying and when somebody is selling. It's very important for the realtors to know about FIPTA. FIPTA is the Foreign Investment in the Real Property Act, Tax Act. It means once a foreigner is selling a property and moving out, like from the investment, they have 20 days that their amount from the sales, the whole amount cannot be given to them. The buyer is responsible for withholding 15% of the taxes. Now, this is just IRS, requirements. For IRS, they say, we'll just hold the short term or appropriate amount. So 15% taxes has to be withheld and has to be sent to the IRS from that um, closing amount instead of giving to the seller directly. And then seller needs to file a 1042S to get that money back. Now, again, a lot of clients, sometimes I just get an inquiry about it that, hey, they holded my money and they're not paying me back because the lawyer tells that I need to get ITN and then I need to file this form. Can you help me? So the realtor should tell them in front that you're selling this property. I'll help you, but you should make understand. And if a buyer is buying a property from a foreign owner, they should also understand that they are responsible for withholding because IRS is coming back to them. So again, I'll take a pause because it's very important and again, connected to us that are there any questions around this?
There are a few questions in the chat, but as a real estate agent, I just wanted to double check. Since we do the majority of our closings, or all of them, myself with attorneys, when you say a buyer is responsible for withholding, does the closing attorney usually do that when they know it's a foreign seller?
So yes, closing attorney can do it, but sometimes, how the IRS has written that wordings, they have put the buyers as responsible. So closing attorney, yes, they withhold because the money is coming in the escrow and then it is pushed to IRS from there. Yes.
Right. Well, we have a few more questions in our chat, so if you can get to a few of them. There are a couple from Fatima Diallo again. She's asking, as an S Corp, are you required to pay quarterly estimated taxes in North Carolina? And then her follow-up question is, my quarterly taxes refer to the S Corp company itself, not from payroll. Do you need to pay quarterly taxes for the S Corp?
So the answer to the first question, yes, you should be paying quarterly taxes to IRS as well as North Carolina both as a S corporation because you have made it as a corporation. But suppose if you're not making any profit, means the company doesn't even have enough, profit, or in the end you will think about, you will get a depreciation and everything will be written off, then you will not be paying in taxes. But on high level, yes. And let me see the next question again. Just miss. Was Fatima, right? I think so it moved to answer. Okay, we can move to the next question.
Next question is from also Portillo. Do I need to report to close S Corp when I retire?
You should close, absolutely. Once a company is made, it's like a birth of a baby. If you do not file a tax return on time, you will get the letter of IRS for the penalties, or you just close it. So yes, as soon as you decide that I'm not doing any more work, not using this company, please close it.
Thank you. A question from Gaurav Shah. This is about selling property in India, inheritance. In India, your cost basis are based on your indexation. How will one determine cost basis when filing U.S. taxes for the same property?
Okay, interesting question. And again, because I'm a chartered accountant there, I can tell you. So what happens in case of inheritance here, especially because it's India, the country we're talking about, we will go into the indexation rules here, and the cost basis will come either the fair market value or the indexation rules. So we have to go in the details to see what evidence is available to bring the cost value of that, and we can use that.
Perfect. A few more questions, and then I guess we can move on. Let's take three more questions.
Sure, we can take it.
Yeah, Andrea Mahungo. I started an LLC 2 years ago, but didn't do any business with it, and I didn't assign it as an S corp. Can I just fill out the form now without penalty, as I plan on doing businesses?
So if you have done, so open a LLC. So what happens, the LLC tax return is done with your simple 1040 form. And that's why the IRS has not given any notices, because they are not expecting a separate tax return from that. So either you can just close that LLC, so just keep it clean. But if you just want to start it and do something, you can use the same LLC and start it up and running, or convert it into S corp, possible. Yes.
Fantastic. And another question by Abhinav Agarwal. Is 15% of capital gains withheld, or 15% of the entire sale amount?
Good question. It will be 15% of the entire sale amount, because you, as a buyer or attorney, as a seller, will never calculate the capital gain. So what they will say is this 15% of the total, sell amount of the property value, you have to withhold that amount.
Perfect. And last question, it's two parts from Trivia Ivy Realty. Are there any tax implications, such as the FIRPTA, the FIRPTA, for buying U.S. properties? And the follow-up question, or their follow-up question is it more beneficial for the foreign investor to use the ITIN to purchase USA properties from their country, or use a U.S. citizen or permanent resident in the USA?
So, a very tricky question. Are you asking that whether we should use ITIN or US? If you are a foreign person, then you will be using ITIN. And let me take it back to that slide for the ITIN. That will just maybe clarify that how ITIN works. So again, there was two questions. So ITIN is a substitute of social. So if a US person is having a social, even if he moves outside the country, he will always have a social security number. He has to use a social security number. ITIN can be taken if he doesn't have social security, then he has to use ITIN to buy the property, if that helps.
It does. I think the way I read it is they're asking, for example, if there's a married couple, one has an ITN and one is a permanent resident, should they,
Okay.
which one should they use?
Doesn't matter. Yeah, doesn't matter. Better to use social so that, everything goes seamless, and, social can be used better, but it won't differ anything.
Thank you, Vinita. Those are all the questions.
Awesome. Thank you. I'll just cover some more details on ITIN and, how it is working and what the process. So long time ago, ITIN used to be given to anybody, who's requesting a secondary identification number, and IRS never used to come back to ask or inquire about it. But recently what happened, and you might have seen if you're working with any foreign people, their ITINs started getting expire. So they have to renew it if they have not used the ITIN numbers in every 3 years. In fact, I got a client, long time back, maybe 2008, when it was like very, very depression time. A lot of banks were giving loans, and because they wanted the properties to be sold without ITINs also, because they just, so he came now, he cannot even collect the rent because now IRS became more stricter, that now I want to apply for ITIN because that time they did not have it. So that this can also be a possibility if you are doing a property manager work, or if you are renting a property which is owned by the foreign person, because you have to issue them a 1099 form. So like suppose if you're doing a property manager work and collecting a lot of rent from them, at the end, once you have received the income, you deduct all the expenses, you issue them 1099. A 1099 has to be issued with a social security number. If the foreign person is the owner, you will need the ITIN. So that is also very much important, that a person should have ITIN. Now, what happens if the ITIN is expired? IRS did not send any formal letters earlier. On the website, it was just said that, anybody whose number are starting with the digit 91 or, something, has to go and renew it. What happened with that? A lot of people did not even came to know that this has expired. Their tax deduction, which they used to get on their tax return, because if the spouse is having ITIN, they were not getting those deductions, because as married filing jointly, you should be getting 12,000 plus 12,000. They did not got it. So then they came to know that they have to renew the ITINs. So that is the change of rule which happened a few years back, that the ITIN also got expired, but we never know what will happen in future. But it's always good to keep a track of it and keep checking your ITIN is good. Now, two ways of doing ITIN and what we have done for the people, and more details about it is, what IRS wants is you can take the passports, fill up the forms, W7 form, and put the passports and send to them, which is very risky. If you're sending to the IRS, it might not even come back, or who's tracking that. Then you can go either to the country, in which you are resident in, to the US embassy there and get it certified. So like how you get a visa in other countries. So suppose we'll take example of China. In China, there will be a US embassy. The foreign person can go to that embassy, get their passport verified and signed. Now, if we get that signed letter in US, we can apply for the ITIN application. That ITIN application has to be sent with a certificate of accuracy, which means somebody has seen and witnessed that these has been signed, and complete all the information with their foreign address or their US address. Now, again, if they're a first-time buyer of the property, they will not have a foreign address. So it's perfectly fine to have the foreign address, and they will get the ITIN on the letter and the ITIN number in their foreign address. I wanted to see if anybody has any questions regarding ITINs.
I don't see any about ITIN, but if we're working with a buyer that says they have an ITIN, I have worked with them in the past, and they've gotten loans locally. Is there a way that we can check if they share that ITN number with us? Is it a public domain that we can go to?
No, it is not a public information. It is something same as the social security numbers. People are required and suggested to keep them safe, but I think they can apply for loans. And I'll tell you one more way of getting ITINs, what people do. But did that answer the question, Eddie, or I missed something?
No, you answered my question. We have another question online. It's from Alcic Portillo. As a buyer's agent, how do I know the seller is foreign owner?
Good question. I think so. The seller's agent should be identifying and telling you upfront, because now it is seller's agent responsibility that they tell you everything. And this is some, I would say, is a matter of fact. It's a material fact which should be known and shared with the realtor. Yeah, because once the property is sold, it's his buyer's responsibility to do the withholding. Now, everything should be set up. They should have a way to report and put that money. Even the closing attorney would have to know that, this will happen. That the foreign owner, the seller is a foreign owner.
Great.
Okay. I will
So,
share a very important, yes, go ahead, Eddie.
oh, sorry, just one more question from, it's about ITIN. From Liz Simon, are there service companies that agents can refer foreign buyers to for an ITN application? I think it's in your slide that you do it, but I'll let you answer that.
Refer foreign buyers. Um, there is no. What happens is basically if the foreign person is coming and the first person they will say, hey, I want to buy a property in US, they will reach out to realtors. So realtors should say, yes, we can help. And that's what the global company, the SIPs, I think so is main helping. They say, yes, you can buy. Absolutely. Let me tell you, first you will need ITIN. So that's where we are trying to educate this whole realtors thing that you can help selling the foreigners the property by getting ITIN. So either Google, there's no such agencies, but any like local realtors will help them to know about it.
All right, thank you. And Jose Serrano is chiming in saying, I believe the S question, I guess the foreign question, it's a typo there, is included in the new offer to purchase if I guess the seller is a foreign national. And I don't recall seeing that, but sometimes, going over templated forms, we tend to skip over things that we see frequently. But I don't remember seeing the checkbox for it on the offer to purchase, but I'll definitely go through it more thoroughly. Those are all the questions.
Okay, awesome. I'll tell you one more interesting thing why ITINs are needed and what people do as if they're buying like not a single home, but they might think about buying like the whole commercial property or lot of residential, like a whole development thing. Now, what people do is how to get the ITINs if they are here in US already, or if they're in foreign too, they can open a LLC. And now this is a D route of getting ITINs because sometimes you'll see that it's not very easy process that you fill up the form and the IRS says, okay, accept it, and you get the number. They ask, why are you applying? You have to put, oh, I'm opening a bank account. So there's tick marks of that form, and I'll try to bring that form which we fill up. It's called Form W7. But what happens is we can open a LLC for any individual. Now, after opening a LLC, which any foreign person can open a LLC because they're doing a lot of businesses with Amazon and stuff. So a lot of Amazon people, same way, open a LLC with the ITINs. So here what he will do is first open a LLC with their own name and then apply for ITIN. Now, once he has ITIN, now he can get loan also on the basis of that LLC that helps them to buy any investment. So this is also a big chain. If it's a very big investor, he wants to start a business, and recently I found somebody from Europe who was inquiring, hey, I want to buy a whole warehouse here. So like, can I get loan? Very hard to just directly get him loan, but if he brings the business first, he open his LLC. Now the bank also have a proof that there's some activity going because the business is related in Europe. They can find the details, and now it's more easy to get the loans. So that is a possibility. I'll just stop sharing my screen for a second to bring that W7 form because I did not have that.
While you're pulling that up, I just want to chime in that I think Mr. Jose Serrano is correct. Section 8A in the offer to purchase, it states evidence of title, the seller under seller obligations, evidence of title, payoff statements, and non-foreign status. So by virtue, I guess, of going through this, you're saying that this is a non-foreign purchase. So thanks for bringing that to our attention. Is it?
So let me share my screen again. So I just pulled up the W7 form, which will be like a common form people see. But if you see, here's the options they ask you that, is that for non-resident? Is that for dependent, for spouse, or for whom are we filling up this application? And this is a form which is just, is needed. And it is available on the IRS website along with the instructions that what is the reason are you applying for this form? And one of the reasons they give is just opening a bank account. So that is a possibility that we can say that, why we are opening this bank account. And did I miss your question earlier?
Yes, absolutely. Did you answer my question? Is that what you said?
Yes.
Yes, you did. Thank you.
Okay. Awesome. Thank you. Okay. Awesome. I want to cover one more thing here in regards to the 1042 form filing. So now there are some legal requirements of this form also, like how to file and when to file. So this is something like a tax return, how we do tax return as a normal person. Like suppose if you have a seller who has sold a property, now he needs to get his 15% back. Will he get it or not? That's a big question the seller asked. He will absolutely get it if he is a foreign person. Now it depends upon, coming back to the first slide, the double taxation rule. If that country where he is residing has a tax treaty with US, that if you're paying taxes in your country, you do not have to pay taxes. So, little bit theoretical way, but what happens is, suppose we take an example of Canada. Now, if a resident is from Canada and he sold a property in US, he will first do the Canadian tax returns showing this property which is sold, how much profit he made, and did he pay taxes there. If he has done that, then he has disclosed that thing in 1042, so he will be able to claim that money back. So basically, what IRS is doing by withholding that money, and withholding is just like deduction at source, is the estimated minimum or average tax amount compared to all the countries that in case if they get an inquiry that he was a foreign person but he never paid taxes or he paid taxes in this country, then IRS has that money, and these are all reported as per the FIPTA. So that's the only way for a foreign person to get the money. We have not seen many cases that people are not able to get this money. Once it's deducted at source, people complete their tax returns and they are able to get that deduction back. But there can be a time limit for 3 years. If they do not file that on time, then they will lose on that money. So again, something important, as soon as the property is sold, the seller should know that they have to comply with the rules to get the withholding. Otherwise, and this amount by attorney or somebody can be different also. Like 15% is as per the IRS rules here, but we suggest or we start with at least 20% also sometimes, because that's the capital gain, higher long-term capital gain percentage we are bringing to. Okay, yes,
There is a question that relates to this. I think you answered part of it. It's from Chris Isaacs. If an international investor is selling a home and doesn't have an ITIN number, how long do they have to apply for one and ask for the tax withheld back? So his question is closing first and then asking.
Yes. So Chris, how long they have to apply? So ITIN is a long process. When I say long, 3 months. You you have to do the application. It's all paper. Nobody can track it. Once it is posted to the IRS, it just go very slow, 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 slow. Even if we call multiple times, they will say, okay, ma'am, we are working on it. So it's a 3 months process. But I would say start it. There is no harm in getting ITIN. So like once you make a company, you have to file the tax return regularly, right? But getting the ITIN is not hurting you. So I would say if you have a plan or something, just take 3 steps there will be. If you are living in a foreign country just now, then you will be going to the US embassy of that country. If you are in US, then you'll just meet any of certified agents here. I myself am a certified agent. Just on the IRS website, you can look for the ITIN certified agents, and you can be helped with the ITIN there.
We have one more question from Trivia Ivory. Is the LLC for the investor open using their address of their foreign country? Do they open it with their foreign address?
Yes, that is answer is yes. So example can be for the real estates. Yes, if they're doing the investments, they can just use the foreign address. Sometimes if you do not want to use the foreign address, then what you do is different options. Like how we talked about some tax haven countries, there are some tax haven states also. I do not have that slide here, but there are some tax haven states also where, like North Carolina is charging 5% tax, but Delaware, Tennessee, Wyoming, those states, we can open a LLC in those states for a foreign person. They do not have to be resident here, and then use that address. That is a possibility. So anybody, I'll give you the example. If somebody is doing business on Amazon just now, and he is can be of any country or from China, if they open a company, they open in Delaware because that state has a minimum requirement of state taxes, state compliances, or any other sales taxes. So when they are saving on those three already, just to make it more easy, they take a virtual address from that state. Now they use that address for anywhere they need to do business. So that address will be used. Awesome. Perfect. I think so. That's all covers for my presentation. And this is just my information. If somebody wants to reach out to me again, that's the website. A lot of ITIN information is also given here. How to apply, including the form, how they have to reach out to the IRS or calling to the IRS. That should be the way to do it. And then we can open it for the questions again.
And there's one more question that came up by Guaran Shah. What is a virtual address? How do you get it?
Oh, you have to pay for a virtual address in Delaware or any other state where you are not living. So it's like a registered, like a PO box number you get. Same way, a type of a virtual address you can get in different states.
Thank you. I personally have another question. I travel a lot and I know a lot of U.S. citizens that have dual citizenship, like U.S. in another country. And a lot of them invest overseas. And I've asked them before, I said, how do you deal with taxes? And, to be quite frank, their answer is always a little scary to say, how would they know what I do overseas? So, is there any words of caution that I could use in following up to that statement in the future?
I would not say that how US will know what they do overseas. The reason being there's a body which is called FinCEN or FATCA. So all these countries are related, like the central banks are related. So once your ID, unless your names are different completely and you're covering yourself, illegally. If your names are same, your banks are connected somehow, and the reportings are done. So that FATCA reporting has to be done, and a common information is shared by all the countries, so they come to know. The second part of the question is US is a superpower. So what US says is no matter where you are earning or what you have paid taxes in which country, US will charge you tax on the worldwide income. So what you have to do is you file the taxes in that country and then you report everything here. Either you get the credits or you do not. But because if you are resident one time in the country in US, you have to pay taxes at par with the US tax rate or tax brackets.
Thank you. That's fantastic. There is no other questions that I have in the chat, but I wanted to make sure that I let everyone in attendance know about our next in-person event that's coming up. We have another global committee event titled "Home is Where the Visa Is." It's Global's next in-person event on Friday, September 6th at 10 a.m. Again, it's Friday, September 6th next month. There will be a free breakfast. Registration link will be in the chat. So please, if you can attend that event, it's going to be a great follow-up event, and a lot of the information kind of intersects with what Vinny has been going over. If you work with foreign investors, or if you have foreign investors that are interested in getting an investment visa to invest in the U.S., I guess there's going to be a lot of overlap in information there, and this event will help answer a lot of your questions about that. With that, I don't see any other questions in the chat, so I just wanted to thank everyone again for attending this great session, and special huge thanks to you, Vinny, for taking the time to share this. It's been very informative. I took a ton of notes, so I'm sure everyone else on the call or on the Zoom did as well. So with that, thank you so much. This meeting is adjourned.
Thank you so much, Eddie. Thank you, Michelle. I really appreciate RRAR and the Global Committee, for arranging this. Appreciate it.
Thanks again. Everyone have a great day.
Same to you.